I'm driving, family. Good evening. Hope everybody is well.
Good evening.
I don't know how to mute myself again, so can you mute me and I'll just listen, but I'm driving.
Sure.
Thank you.
You're welcome, Kim. All right, everybody. Good evening, good morning, good afternoon, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Agent Session. I'm your host for tonight's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage, and we are definitely happy and grateful for each and every one of you being here with us this evening as we move into the month of October, ready to take a look at the technicals and the fundamentals, right? We want to attack these charts, new month, new opportunities. So let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. With that being said, hey, we know the deal. Everybody drop me a 1 in the chat. Let me know that you're ready to go and you can hear me loud and clear, and we can get this session moving. All right, Jerry, Michelle, David, everybody, appreciate it. Hope everybody is well as we move into the month of October. This year is flying by. Let me make sure that everybody has control over their microphone. Okay. All right, so let's dive in. Let me move this stuff out of the way, escape out of this, take a look at the fundamentals. We will go over to the calendar, and let's start off at give me 1 second, let me get my stuff set up. Let's start out the third. Okay, we've got for the Swiss franc, we've got the CPI that missed, right? And these are numbers that everybody's paying attention to because they're trying to figure out, right? This is the consumer price index, which accounts for the largest portion when it comes to inflation, right? Consumer prices, okay? Consumers get hit the hardest. So everybody now is paying close attention to these numbers as all of these central banks, they race to increase rates to try to combat inflation, to try to catch up to what the Fed is doing here in the United States. So they're looking at these key numbers. So CPI came out month over month for the Swiss franc for Switzerland, and came through at -0.2. So it came in under. So everybody's trying to look at these data points and say, hey man, is inflation peaking? Not just for the native currency, but just around the globe, right? As the Fed leads the way. So everybody's trying to look for signs. The Fed is saying they're hawkish, but when we get these data points that come out, it's like, oh, the market is based on speculation. So yes, this is what they're saying. And even though they've been saying it for, I don't know how long now, just maybe they'll start to pivot and slow down, right? With the aggressive rate hike. So any type of data point that can support that gives a little spark to the markets, and you see things start to go the other way. We see Spanish manufacturing PMI came through just under. So we come in and we take a look at the ISM manufacturing for the United States. It came in under, right? So it's causing the markets to rally a bit, seeing these numbers. Hopefully inflation is peaking. Maybe the Fed will pivot, right? Just continuing that narrative. Fed Chairman Powell spoke yesterday. Ryan, good evening, sir. How are you?
Good morning. Good evening, bro. I'm doing well, man. I'm doing well. How are you?
Doing pretty good, man. Glad to be here for another month. Definitely blessed. Indeed.
Yes,
Indeed.
sir.
Yeah. So did you hear anything from what he said yesterday?
No, I didn't.
I didn't hear anything. I didn't get anything on that. I've got to catch up to that to see. Maybe sometimes they speaking about something off topic, something else dealing with the economy and things like that, not necessarily monetary policy. So yeah, I didn't hear anything either. So have to dig a little deeper for that. We've got the monetary base -3.3 coming out of Japan. The cash rate, right? We've got I guess Ryan would say people consider that a dovish hike, huh?
Yeah, because the statement afterwards was relatively dovish, relatively soft. Basically, everything is going to be data dependent. They do anticipate increasing rates in the future. They do anticipate prices continuing to increase, but they're going to take their time to the reason they went below excuse me, expectation is because they're trying to assess where things are. So
okay, I got you. So yeah, because they were expecting what 50, they came with 25, right?
Yep.
Okay, so hey, that just confirms our technical analysis bearish on the Aussie. So that's fine with me, right? We keep playing those to the downside. I was able to look to see that the Aussie CAD continued to move down as well today. So we'll continue to keep an eye on those Australian pairs. And then today, right, the JOLTS job openings came through, right, came in below forecast. So again, just another data point. We see that we got a decline in job openings here in the United States. One article I was reading, the largest, I think it was healthcare and social services or something like that, two hardest sectors that were hit with the job openings data. So we know we've got non-farm payroll on Friday. And I think we've got, when is that? Is that tomorrow? ADP, right? We've got ADP non-farm coming through tomorrow for the on Wednesday. Yep, tomorrow, October the 5th. So we know that's like the precursor for private industry jobs numbers coming out here in the United States. So we'll see. We got a decline in job openings. We'll see how that goes. But again, any signs that the Feds might make a pivot is what everybody's looking for. And you're seeing the markets rally off of these numbers. Okay, so we always see technically what's going on. We always want to know the why behind why the market is moving the way it's moving. Okay, so you see a lot of corrections happening. So this that came out. I think they came in. Let me refresh this. But New Zealand, they came through right on forecast, I thought. Let me see. All right, Tuesday. Yep. So 3.5 came through. So they were expecting 50 basis points. So they did it again, another 50 basis points coming out of New Zealand. So we'll take a look to see if that had any type of impact, but came through as expected. And we'll see what happens with the rate statement that follows. Again, it's always about moving forward. So we know we were expecting 50 basis points. We got it on the rate hike coming out of New Zealand. Now it's all about what the RBNZ is going to say moving forward. So a lot of stuff going on this week, right? We got ISM PMI coming out. So we shall see. This is going to be a big one, right? That's going to be a big one to see if that comes in under. So we'll continue to watch out. Ryan, anything fundamentally that you caught today?
No, sir. After the Aussie last night and what you just spoke about, a lot is just pointing towards waiting on Friday.
Yeah, I got you. So I'm not betting against the Fed.
Me either, man. That's what I told them this morning.
Yeah, we keep getting these short bursts of energies, and then they come through and they say exactly what they do exactly what they said they were going to do. So we see here because of that, right? Wall Street rallies for the second day. And the way it has been is these are just served as corrections, not necessarily complete trend changes. They've just been corrections, and then all of a sudden you get another crash to the downside. So I'm not sold yet. So we shall see what happens. All right, all types of stuff going on. I love this part of the game, the fundamentals. If I didn't have the two together, looking at the technical charts would probably, to me, just be like watching paint dry. So I love it. And I hope everybody in the group has just learned to at least have a respect for it, because it does matter. If we come on, we take a look at the US bond yields, already back down to 3.6%. I know, Ryan, me and you were talking about this earlier. It's just, this is from all of our mentors, the groups that we're part of, is just guys that have been long, and men and women have been trading longer than both of us combined, are just like, haven't seen it. These crazy swings from 4% in the bond yields all the way back up, all the way back down to 3.6%. It's just been two extremes. There seems to be no middle right now. So yeah. So bond yields are down. And right, as a result, we take a look at the US dollar, everybody, right? As the bond yields go, so goes the dollar. And we see that we're getting this correction. Back to the downside. Now we're back at this support level. Okay, we were talking about, hey, we could possibly get a correction. Well, we got it. All right, and now it's just a matter of seeing, is this level going to hold, or we're going to get a deeper correction on the dollar. So here's the daily. All right, it all comes together and makes sense. 80-20. Okay, stochastic is back in the buy zone or oversold. So let's see how this thing dances around this level. We know, right, on occasion it's been known to consolidate range at a level and then either break to the upside or break down. So we, you know, with a major breakdown, there's been nothing modest about these moves in the market. It's like if it breaks a level, it tends to crash, right? In this case, to the downside, and if it holds, we eventually see an explosive move up, taking out the high, and making a new one. So that's just the way it's been going. I do remember, Mary, right? I do remember that was a great call on that butterfly on a monthly time frame, and it reacted too, didn't it? It definitely reacted. Yeah, thanks for bringing that up. Thanks for bringing that up. That was it corrected straight to the downside, and that was on a monthly, right? Yeah, and it's starting to make its move. I can get this out of here now. Yeah, I appreciate it. I appreciate it. So yeah, we're seeing it. We're seeing it. We got a D extension hit, came right into that level. So let's see. Let's see. That's why I say this like the ISM manufacturing number is gonna be important. Right. So we got jolts, we've got ADP. It's important, but I don't know. It could be on or it can be way off, and I think everybody's starting to see that now. So ISM services PMI is going to be important, super important. Of course, anytime you get a central banker speaking from Canada, that's always important. But here on Friday, non-farm is going to be important as well, especially coming off that JOLTS data. So we'll see how it goes. The butterflies are harmonic pattern that she spotted, right? So that harmonic is basically getting you to that D point, right? Creating a formation that's getting you to that D point, to where a reversal may occur. A reversal may occur. So it's an extension point. All right. So let's go into these charts and take a look at. You're welcome. Let's go and take a look at the first thing I want to dive into is, well, first we'll look at this Aussie CAD. Take a quick look at it, right? Still making its way down. If we come to the 4 hour, right, we call it, hey, bearish continuation, and it's grinding, right? You see that listen, everybody, it's slow as molasses. The ATR is only at 39.6 on this pair. It's gonna take a while, right? So if you launched the trade a while ago, just let it go. Don't even drive yourself crazy, right? Thinking that it may get super impulsive, because it most likely won't, right? So this is the 1 hour on the Aussie CAD. One thing that could speed it up, I guess, is Friday. We've got Canadian numbers coming out, jobs numbers. So if it's favorable, you know, that could push it a little bit faster. Joy, I forgot it was running. Absolutely. All right. David, question. Accident, I saw a hand raised.
Oh, okay.
You good? There you go. What's up, man?
I think my internet is unstable, so I thought it's my hand. It looks like. Sorry about that.
Oh, okay. All right. How you doing anyway?
Great. Yourself?
I'm doing really well, man. Appreciate you asking. Glad you're here.
Okay, thanks.
You're welcome. All right. So this is the Aussie CAD. Hey, just stay bearish. Let that ride. All right. I want to take a look at these pound pairs, right? Well, this one is already starting to correct. Okay, so we want to put this. I know you all probably have them already. This is the savvy group. You see what's going on with these pounds, right? 1,000 pips one way, 1,000 pips the other way, because of what happened fundamentally, right? So if you read the newsletter for this week, you see exactly what's going on and what caused that to happen. So make sure you check that newsletter out when it comes to what happened with the pound. But we're here, hey, we're high up in the zone, and the game plan is like, all right, we run these sub fibs to the upside, and we play it like corrections, right? Play it like it's a correction. So right now we've got an 80-20, okay, in the zone. All right, don't let it confuse you. We know that this has been moving down, and we've since got a correction. Okay, so if the double fibs fool you, just look at it like, hey, price is moving up, and now I'm broken in trend line. Okay, I know that I'm still within the down AB boundary here on the 4, which tells me that this could U-turn and continue all the way down to an extension. But if you just want to play it, right, kind of a play as you go, this is a play as you go, then play it as, hey, this is my 80-20, right? This is my 80-20 potential setup here. Use your confirmations. Drop down to your lower time frame. Use a cloud. Use a trend line break. Right? Let it break levels and pull back before you take an opportunity. However you're going to enter it, this is the setup where we have a potential correction that's going to occur. Now, we know that, hey, it's within this down AB boundary, and as long as it doesn't take out the A, it has no choice but to go our way. But the pound's been so back and forth because everything that happened fundamentally. All right, so we are where we are now. This is high in the zone. Okay, so technically on a short, right, you would be looking to play this like here, boom, stops above the A. Don't like that big. Stops above the A. I got an A6 retracement. We're coming into a weekly resistance level. If it turns over now at this 8.6, then my D extension is right here based off of this 4-hour fib. Okay, that's how we would play that. Okay. But what you could do, knowing everything that's going on with the pound, okay, is you could just play it as you go, as I like to say. So right now, I know I have, if this turns over, and this is going to continue on a downtrend now that all the mess is out of the way, right? Then that's almost 2,000 pips back to the downside. But what you can do, right, because of their level of uncertainty with the pound now and what's going on, we got the stock market rallying on these hopes that the Feds will pivot. I think that might be temporary in nature. But nonetheless, it is what it is. What you can do is just play this fib here and your normal 80-20 play, right? So you could come in and say, all right, I'm going to play this like I got an 80-20. This has been exploding to the upside. So I'm going to put TP1. I'm going to put TP2. And then we always know our TP3 is the A boundary. So if price wants to turn over and start making its way down, then you just play it like so, right? TP1, TP2, TP3. Now, we say if it doesn't take out the A, it has no choice but to go our way. But if it does take out the A on this type 2, this subfib, then what? We can come, right, and say to ourselves, well, it took that A out. It may just continue down now. Okay. Okay. So you can play it like that. All right. Any questions? Yeah, Ebony. For sure. They are, and they're big moves. They're big moves. So here's the thing, Ryan, and Ryan has done an excellent job at this, right? So even if you just put in your trade plan, we've talked about this before, okay? and you say, hey, all I'm gonna do is scroll these charts and look for 80-20s, like these setups, okay? We know that these moves are huge, right? Back to the downside. So even to that 382 is a monster, okay? So if you keep your stop, right, tighter, okay, usually it comes out 50 pips or something like that, or whatever it is. You keep your stops tighter on that, right? That's a wider stop in regards to pips, but not relative to the target, okay? So if you keep a tight stop on it, and even if it continues higher and takes you out, over time, you're gonna make, right? You're going to make money, because then you only need 2 or 3 of them to complete and hit target to wipe out the losses, right? Just risk to reward. That's all I'm saying. To wipe out the losses and put you in profit. The key is just being consistent in what you're doing, right? So if you play it on a lower time frame, like a 1 hour, you find a 1 hour 80-20, you may have a stop that's 50 pips. But the target, the downside target, could easily be 150, 200 pips, depending on the pair, right? So even if it pushes up and takes you out, that's okay, because you're only gonna need a couple of those 80-20s to put you back to break even and put you back into profit ultimately. If you stay consistent in what you're doing. Does everybody follow me on that? Drop me a 1, 2, right? That's just how the risk to reward plays out on these. They're huge moves. They're huge moves. So whether you're on the daily, 4 hour, 1 hour, 15 minute, 5 minute, okay? If you keep, because that's the beautiful thing, right, about playing just that true 80-20, is that once it hits that zone, right, and especially if it forms that high, you're like, okay, well, I'm gonna put that stop a little tighter, because it is gonna go down from here, and if it breaks and pushes through my stop, it's probably gonna head to the D at that point anyway, right? But your stop is tighter, so the risk to reward ratio becomes ridiculous, right? On these 80-20s, right? Letting it form the high, even a trend line break or whatnot, they become colossal moves to the downside when you get them. So if you have a series of them where you got your stop right over the high once it gets to that 80-20 zone, and you get stopped out a few times or whatnot, don't worry about it. It's gonna come back. We know what happens when they move. We know that. So we know how big the moves are. So that's how you play the game at the end of the day, because we don't know exactly which ones are gonna play out. If we had that crystal ball, we all be paid, right? Big time. So that's just to keep in mind. Just keep your risk to reward intact. Just keep it intact, and let things play out. Let trades run to their target, and you'll make money. You'll make money. All right. And I know it's hard, right? When you're up 100 pips and then it pulls back 50 pips and you want to jump out the trade, but just keep in mind it's about a series of trades. And if you keep pulling them early, you won't set yourself up to be profitable in the long run. All right. Any questions on the pound Aussie?
No, sir.
Okay. All right. That makes sense, right? If U-turns takes me out, right? It could go if it breaks that resistance at 178, takes out my A. It's like, well, this thing probably gonna continue up. I'll play the next correction. I'll look to play the next correction on it, right? It becomes very, very simple when you just do the same thing over and over again. Look at this on the daily. Look at this. It's crazy, right?
Crazy move.
Yeah, that's fundamentals. It's only the big monsters that can make that happen.
Yep.
You know, when you come in, you try to come over on the folks and drop this big ridiculous tax plan, knowing that the trickle down is never going to happen, and now you got the people with the pitchforks at your doorstep mad. Then so you tank the market because you decided to do it without putting a fiscal report alongside of it. So that tanks the market. Then they have to come in and start buying long-term bonds, agent bonds, to protect people's capital and pensions. So that spikes the market back up. That's just been a mess. That's been a complete disaster. So we'll see. We'll see how this goes. But at the end of the day, the market moves in waves. So it's just been a lot of even with the hikes, right, Ryan? If the Fed would have made the pivot, and it would have been hard, but if they could have made the pivot earlier and started hiking rates more gradual, you wouldn't get the spikes. And that's why we're getting spikes everywhere now, because they left everybody around the world no choice but to hike rates at an accelerated pace. Right? So
Yep, exactly.
yeah. So that's why we're seeing these wild swings in the market, everybody's playing catch up. And so hopefully soon it starts to balance out. I wouldn't mind if it balanced out now and the pound started to fall. So that would be good. So if we come to the one, you can see we're kind of in that same scenario, right? It's pushed up higher, right? But we're still below that weekly 178.12. Okay. So hey, if the setup needs your confirmations and you get in, just follow the process, right? Live with the results. Okay. Manage your risk. So that's the pound Aussie, pound CAD. Okay. Come and take a look at this nice wick right off the low at 1400. Look at that. Now we push back above 152.53. So it's been bullish. Look at that correction. This is still just a mess. Still just moving up. Crazy. But here's the 4. All right. This is what we're looking at. Same type of scenario in a way. Okay. There it is. Okay. Not as high in the zone yet. Okay. Not completely overbought yet. Same type of scenarios. Okay. But same type of play you can have for yourself. Okay. That main fib, high in the zone, you stop above the A, right? Even if it comes and it pushes up to this 118, 127, if it formed a high in this zone, your stop wouldn't be too much different than that at that point. Right? But what I'm looking for on these is a correction. So, okay, whether it's a temporary correction, then a further move up, can't tell that right now. All right, but same scenario on your pound CAD. Any questions on that? No.
No, sir.
All right. Look at the pound Swissy. Okay. Take a look at it on the daily. Now this one can have. We're gonna see how this market rallies. All right. See if the market continues to rally. We know if the market's rallying, oftentimes the pound tends to move in that bullish direction. So look, we've already got a 50% pullback on that main fib. We hit this key level here, daily level, we rejected. This stochastic is still in the buy zone. All right, so we may get further upside movement on that. This is a level that it just broke back into. It's in this zone right here. All right across to here. All right. So the market's feeling good right now. I think it's kind of smelling itself a little bit. I don't think the Fed's gonna come off one bit, but we'll see. But look, it's moving bullish. The Stochastic's in the buy zone. This one completely. They already took out the A. See it? So here's your down fib. Price action was moving bearish. There's your A. It took it out. So, right. We look for corrections and the possibility for a move up. Okay. So if that 80-20 is your play in that zone up here, if this turns over like this, then you look for opportunities potentially to get long. If your buyers on this pound Swissy, we just saw that daily, hey, there could be more upside potential. Then if it turns right over at that B boundary, then if you like it here at this 118, 127 zone, then you just draw your trend line, and then you could potentially look to get long if you think there's more upside on that, right? Okay. So you would just be looking to roll like this. Now, if then, right, gives you that shallow retracement and pushes up to that zone, then that's your counter trend trade play right there. If that's your area that you like to trade on the chart. No, I do. Right. And then you play it back down to the levels. All right. So that's where we are. So you've gotten couple examples, right? Two that's similar. And then you got one that actually took the A out on this 4-hour fib. Okay. And we know that oftentimes when you get an A taken out, oftentimes on that next fib, right, when that fib reverses, you get a pretty decent correction, right? It's just a matter of whether it wants to happen right now, if that be boundary, or once it gets up to this 118, 127 zone. I would love to see it push there, because then I would look to get short on it. Any questions on the pound Swiss?
No, sir.
All right. All right. Not yet. All right. Not yet. Okay. All right. All right. So let's move on. GJ. Okay. Let's look at it. Look at that push. Ryan, it loves this range for some reason.
Man, don't it?
Yeah. It's pretty unreal. All right. This is listening and learning. That's it. That's it. Like this is unreal. But anyway, here's the look, based on this fib, as crazy as it is, still right within the sequence. That's your H6. That's the deepest pullback that we got. So we expect an extension right there, that 1.18 extension. All right. So that's a potential target, which could put you right back at the range, right? So if you didn't have a fib on, you're just looking at price actions, where's my next level that we might find, right? Price to react is what? 166.37 weekly level. And then right here, where that extension is. Okay. So that's where we are. So look at where we're sitting. There's an extension, right? These fibs to the downside got taken out. So here's this extension. Look where we sit. Okay. Another zone. Want to pay attention to it. Okay. Want to pay attention to it. There's that daily extension. Those levels, top of that range, so to speak. Look at that. Okay. Now look here. All right. Look at that. To the 382. So if you come, however you play it, right? Whether you put your cloud on and you're looking for breaks to the downside, you put your cloud on your 15. Right? Okay. See? Right. There's your 15-minute cloud there. Starting to show up, starting to flip a little bit. Okay. So however you play it, just hey, this is your zone, right? That's where you want to look to make your moves. Just be patient and wait for it. If that's your setup, right? The thing that you should just completely destroy me is that I wouldn't be patient and just wait for my setup. You know, sometimes it takes days, sometimes it may not happen that week. And I used to just, hey, that looks good. I want to get into this, knowing that it wasn't my setup. Okay. So that's where you have to just psychologically, if you can get over that hurdle, it can really help you out. Okay. How did I get the clouds? I have a template saved, but you could just go to, like, if I saved mine as a template, so I could just click it on, but I can go back to my default, right? My default setup. And if you just go to here, see here, add indicators, okay, and you can find the cloud on any platform. If you go to indicators, you put in the cloud like that, and there you go. There you go. All right, so is this here? Okay. You're welcome. So here we go. So it's starting to push through. All right, starting to push through. If we go, if you look at your 1 minute, it's gone a long time ago. It's a nugget there. See, your 5. All right, there's your 5 minute. Look at that break. Dang. You might be done before the move even really gets started. Depending on the type of trader you are, right? If you're day trading. Oh, Benny, I was out a long time ago. I don't need 400 pips. Kidding me? All right. Any questions on the pound yen? No. All right. Right. I drank some coffee at like 7, man. So if I call you after this session, you can hit the ignore button. I'll totally understand. So I'm fired up. I don't know about y'all. It's a new month, but but anyway. So look, another 80-20. Right. So that's I'm not look. I'm always willing to just let the market do its thing. Right. Once you know what you're looking for, you was willing like, all right, whatever chaos is out there, it's cool. Because I'm gonna let the market do its thing. So there's your 4 hour. You don't quite have the zone, but on your 1 hour though, right? Woo! Look at that. Okay. Look at that. This is my zone. Now, if you come down, you do something like that, which I was playing around with earlier. But let's clear this out. Okay. Let's just see where we are. Going down through the levels. Dang, that just broke the cloud. Right. You're a scalper, right? I know we got some new folks in here. I'm a scalper. Man. Same rules apply. Still looking for the same stuff. Right? There you go. Look. 5. Woo. That horse left the table a long time ago, didn't it? It's repetition, everybody. Get the reps so you can see it and you can feel confident and saying, you know what? When I see it break that cloud, I'm in. I'm good. Okay. 1 minute. Go. Right. We're already out. That already gone. Look at that. Okay. It's amazing. Woo. Questions?
That New Zealand rate statement coming in right on target, pushed a lot of those New Zealand pairs.
Technicals and the fundamentals. Thank you very much, sir. Hey, we're gonna give you the framework. You guys take it and you run with it. You take it and you run with it. If you got time, I missed this one. If you got time to be on your computer, you like getting up at 3 a.m. looking for these setups on the lower time frames. There you go. That's somebody's month. We just want to find areas where price can react. That's not even to the target. It's not even close. Fascinating. Mary just took profit on the G and dropped some 7s for Mary. Glad you caught some pips for me too, Mary.
Great work, Mary.
Right? So if all we ever taught you guys is how to do top-down analysis, how to identify potential U-turn points, and proper risk management always, you guys will do all right. You guys will do all right. Here's the pound dollar. All right. Whew. What's going to happen next? I am intrigued. Okay. DXY holds that support level, pushes up, this comes down. All right. And vice versa. So let's see, right? So maybe you just stay perched, waiting for your setup. Okay? Waiting for your setup to occur. All right, let's just clear this out. Let's just look at the chart. Let's just take a look at it. We know where we are from the higher time frames. We know what could possibly be setting up. Now, all right, use confirmations. Be addicted to the process. Right? Okay. Understanding top-down analysis. Understanding the Fibonacci sequence. Believing that the market moves in waves. Okay. Some of the best things that you can trade, learn about the Forex market and the markets in general, not just Forex, all asset classes, right? Just gaining a sound understanding of those technical aspects. You don't have to be an economic genius. Just understand some key fundamental things that occur on a regular basis, right? We see that calendar every day. So we know that it's reciprocal. Those same reports keep happening over and over and over and over again. They cycle in, they cycle out for a reason. All right, so when you think about that, you say, yeah, it makes sense that the market moves in waves. It makes sense that the market has repeatable patterns. Let's think about that. Okay. Repeatable patterns, just like we move, right? We go to bed, we wake up, we go to work, we have kids, we go to events, we work out, we go to bed, we wake up, the same thing happens, right, with the markets. Okay. Questions on the pound dollar?
No, sir.
Yes, Ebony, proper risk management, right? I have to remind myself of that constantly. See these big, ridiculous, crazy setups, right? You're like, I'm about to go get it. It's like, nope. Got to use proper risk management. So, hey, here's the NZD USD. Listen. As bad as the New Zealand dollar has been, and as strong as the US dollar has been, we still get to this 80-20 zone and we get some price action and we see the price move in the opposite direction. All right. It's worth waiting on. It's worth waiting on. Right. So we come to the one. Okay. Got this double bottom type price action, but now we're back through the cloud. We're back above it. Okay. Moving up out of the zone. Okay. It's a weird one because it came back and almost double bottom. Been choppy. Makes sense because the dollar has been strong. The Zen has been weak. Now it's getting that shift going on. So we'll see if we can get that 380, that 382 target on the New Zealand dollar. Any questions on that? That's where we are, right? Where am I at when it comes to the sequence? When I get on my charts, I'm in a down retracement zone. So it's just a matter of how far it wants to correct. We know, right? Good rule of thumb. We get an 80-20 price loves to gravitate back to at least that 382. Like here. See here? Look at that. Okay. That's that. Let's take a look at, I guess I could go through the rest of these New Zealand pairs since we just had that announcement. Here's the 4. Right. Got a little bit of bounce, but this one's been on this way for quite some time, right? A, B, C, D. Okay, so this one, I'm looking for a D extension. It may correct back to the upside. I don't know. Friday we've got the jobs numbers coming out for Canada, stuff like that. So, but this has just been bearish. It's been bearish. So I've got no play on that. Ryan, have you been playing that to the downside?
No, I haven't. I'm not in that one.
Yeah, me either. Me either. And I honestly don't know why. But it is what it is.
When you asked, I asked myself the same question. I was in it a while ago, but
maybe because of the price action on a lower time frame. I mean, on a higher time frame. I don't know what kept me out of that one.
Yeah,
maybe. But we could be reversing. Now that I see this, it'll take a while if it did that. Huh. We'll see what happens with the job numbers on. Yeah, this is kind of, it's all over the place. We'll see what happens with the job numbers on Friday. Something needs to break it up out of this range. All right. NZD Swissy. Let's take a look at that. And we got D extension that was hit. And at the close of tomorrow, we should have a new fib getting ready to pop up on that one from the daily time frame. Look, right. So, hey, do we want to? Look at that coming out of the zone, everybody. So we see if it can finish and hit the target at the 382. All right. It's coming back into the buy zone. Maybe we get enough momentum to push that long. $100 pips or so. It's one to watch out for. What do we look like? Let's see. That's the 4. We got that shape. Look how that shape up. That's pretty price action there. You talk about price reversing. Scroll this back a little bit. Narrow. So I'm running off this top here. Yeah. Okay. Look how it's retested the back side of that trend line. All right, NZD Swissy. That's where we are on that one. Okay, and I don't think I have. I can extend that out. And where's that target? Right in line with it. We'll link that down to the 1 and beyond. And there we go. That's right on the money. See if we can get that target play out. And if we come down to the 15, it's trying to push back through it now. There. Questions on the NZD Swiss?
Oh, sir.
Nope.
That was a beautiful play. Beautiful.
Yeah, appreciate it. Looks like it wants to try to do its thing. I mean, if you talk about, right, snapshot that. You talk about a classic break and a pullback to retest the trend line. That'd be perfection if it plays out.
Yeah.
Man. Let's see. Let's see. All right. NZD JPY. What we got going on here? Just a bunch of scribble scrabble with these yen pairs. Take a look at it from the higher time frame. Pushing bullish. It's a little messy. Brian, you doing anything with this pair? No?
Currently, I am not.
Gotcha. So I see. Let's take it off this low. It's kind of rangy right in that area, but I'm gonna try to play the most recent wave here. See how it comes out. Since we are having a bullish week, I see. Like that. Let me check this out on the forward to see if it. Yeah, forward is just like the daily kind of. That's what I thought. So this 1 hour plays off this swing. So that's bullish against the yen. It's a mess, but it's still within the AB boundary. And it's trying to gain some momentum long. So off that 4 hour, you got a 61.8 or a 50% pullback. So we still got that same projection. So we'll see how that one plays out. Eventually. The target is a short term, medium term target. I mean, the 4 there. That's 4. 618. Got that outer trend line. So right now we're playing to enter the outer trend line move, and we're coming in at a D. It's the best I could do on that one. Any questions on the New Zealand yen?
Hey, Benny, how would you read the ATR? Is it 29.9 pips or is it 299 pips? That ATR right there.
299 off the daily. But let me
Okay.
see. Let me see. Hold on. Let me make sure I got what is, because this is a New Zealand yen pair. Hold on. Let me make sure I got that read right. I will tell you right now. Yep. 299. That's a pretty big range. It's got. Yep. It's on the high side for the daily because that ATR is based off the daily range. So. Yeah. So that's moving, right? It's been moving. It's 230 there. It's a slow day. 80. $7.59. Yep. That's it. Got it?
Yes, thank you.
You're welcome. All right. Any other questions on that pair? Oh, your broker doesn't allow you to trade the New Zealand yen? That's all righty. That's all right. You see, I try. Look, you might not.
The New Zealand Swiss.
Oh, the New Zealand Swiss. Oh yeah, because of the Swiss, probably most likely. Does it allow you to trade any Swiss counters?
Yes, that has been for a while now. I don't know why it doesn't come up.
Yeah, you have to. Yeah, I forget. I'll research it. I forget what the reason is why some Swiss crosses they don't allow you to play. At certain times, sometimes they do, and I don't know. And then you'll be allowed to do it again. So after a while, I forget why that is. All right, I want to take a look at this this dollar CAD. All right, so we've been correcting. Okay, we're correcting. We're almost to this 382 on the daily, and we're deep in the zone here on the 4. If we can get that to U-turn, that'd be a beautiful thing. That's going to come down to whether or not that DXY wants to hold at that support level. Ryan, what you think?
Yeah, it's definitely gonna be about the DXY, but I think we could potentially push that 134 level coming in the
support.
Friday. Yeah.
Yeah.
And even if that DXY ranges a little bit, I think this one could still push the downside a little bit.
Okay. Yeah, I'm gonna be hands off with that report coming out.
Yeah.
Yeah. I'm gonna be definitely gonna be hands off of that one. Target. So we'll see. We'll see what happens with that one. I'm gonna leave it alone with the reports coming because they're on the same day again, right? First Friday this time around in the cycle. Yeah, we've got CAD numbers and US numbers on the same day, so I'm gonna leave that play alone. Leave that alone. All right. Well, let's take a look at this dollar Swissy. Okay, is that daily? It's rocking and rolling for a long time now. We've got some consolidation, which is cool. You got the dollar correcting, so we'll continue to follow that one. But I'm still overall bullish. Right, so we're just ranging right now, but I'm definitely long, right, medium to long term when it comes to the dollar Swissy. But right now we're in a range. We need to come up out of this range and continue long, or push deeper. But I'm willing to wait on that. Wait for that to happen. What you think, Ryan?
Yep, I'm in agreement. On this one, man, I would love for it to push deeper, just for my own personal sake. Don't know if it'll get as deep as I want it to, but I'm waiting on this one as well.
Yeah, me too. This was a beautiful move, right? That last ABCD move.
Man. Yeah.
I don't know. That was classic, right? That gave you both nice 80-20 play to the downside, then a move up, but it'll figure itself out. It'll figure itself out. Dollar Swiss isn't going anywhere. I wanted to look at gold, right? Just to show you the power, right? When we get those AB boundaries setting up, look at that on a daily. No matter how crazy things seem to get, it still follows the sequence. Look at that push. We're coming right into that 382 for gold. Here we are on a 4. Anybody playing gold to the upside? Anybody take that play? I know we got some gold traders. No?
I was about to say. Thought Joe would be honest, she missed it.
Yeah.
Yeah, that's the when I played gold,
80-20. I'm listening.
it didn't hit. Oh no, you cool. My I had a stop loss, but the thing is, price didn't close me up underneath it, so my sell to the downside turned on me. So and then it didn't take my buy limit order because it didn't close at the price. It shot down and then it went back up. And then by the time I looked, I was out of the surgery. And I was like, ain't this buy something? But it is what it is. It hit another sale limit, so I'm playing
Gotcha.
back down to the downside.
Gotcha. How you doing? You all right?
Yep, I'm better
Good.
today.
Good.
Thank
Good. Glad to hear it. You're welcome. Well, here's gold, right? 1 hour chart. That's up against the 4 hour. Got a stochastic in the buy zone though. We'll see. All right, we'll see if it holds that level and pushes down, or if it breaks it, right? It's either gonna push down, it's gonna break or retest that level and continue long. So that's where we are. So let's come down to the 5. Maybe the 15. It's already turning. It's already made its way below it on the 5. There it is. And let me look at the 15, see where it's at. Not quite on that 15 yet. So more conservative play. Let it continue to see if it wants to press down. It's that 4 hour zone. There. All righty. Hey, continue to watch those pounds, everybody. Any questions before we log off for tonight's session? Looks like a lot of good things setting up as we start our October. No questions. I know what you meant, Joy. Oh, you're welcome. You're welcome. All right, Ryan, anything to add before we close out?
No, sir. No, sir. Great session, man.
Appreciate it. Well, hey, look forward to seeing everybody tomorrow, 6:30 a.m. Eastern Standard Time with my awesome partner, Mr. Ryan Carter. See what type of market movement we get overnight. Till then, good night, everybody.